Go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today, Scott Andrews. He is an account manager at Forex Briefcase. Scott, how are you?
I'm doing well, Rocco. Thanks for having me back.
No, it's such a pleasure. Friend of the show by now. Listen, the rise of buy now, pay later in Australia. We have got multiple companies seeming to have set up shop, the likes of Klarna, PayPal. What do you think makes Australia such a unique location, geographically speaking?
I read the questions and I looked at that and it's a good question. I mean, it's an offering, especially for younger people, that they just seem to be drawn to it, and they just like spending a lot of money, even though they don't make a lot. But it's just, and it's.
So easy. What do you think? It's culture, all right?
Yeah, I've never used it before. I bought a little bit, in the peak of the cycle and got shaken out, but I didn't really understand, and I didn't sort of look, honestly, with how difficult it is to make a living when you're younger because of everyone getting a uni degree and then no one really wants to save. So, but people just love using it. It's just prolific.
Because if you look at other locations, look at Great Britain, look at America, look at Africa, even Africa, I mean, you would think buy now, pay later would skyrocket, but it's not. It seems to be this little continent in Asia, right, that is absolutely booming. So something is obviously happening there, and you might be right. It might be the younger generation embracing this almost a quick access or easy access to funds, right? That I can kick the bucket down to whenever. And
I think another factor was the very attractive government assistance during COVID. It was $750 a week people were getting.
That's a lot of money.
It was, and even if you were working, you would still get it, and that's $1,500 a fortnight on top of what you make. If you are somehow affected by COVID, like the government was opening the gates to anyone nearly.
Wow, that's interesting. That might be a major factor that even I missed. Listen, our friend, Mr. Dorsey, from Twitter fame and also Square, they just bought Afterpay. That's massive news in the fintech world. Good for Australian fintech, Afterpay being an Australian startup company. What does that mean for the industry down there?
It's interesting. I was listening to a few commentators on. I did a little research, and you've got two camps. You've got, it's like there was this gentleman that sold out of a large shopping center chain, and he got out just at the peak. And if you have a look at the Afterpay board, they're all like, yep, let's do it. So there's two thoughts here. They know that it's probably done its dash, and they're like, this is perfect. Or there's a lot more growth there. So there's a lot of other sympathy plays that are going on right now. The ZipPay is the second biggest. I've been day trading that a little bit, but I'm not particularly good at getting that stock, and I missed the run up. But so it's interesting. It's either going to be this is a one-off thing, or there's going to be some other moves from other competitors on, some other smaller ones. Maybe not Zip. Everyone's saying Zip, but there's a few others like OpenPay and IOU's up like 30% as well. A real small one, real penny stock type that's been beaten down for, months.
So are we seeing a surge of Australian fintech companies now because of this buyout?
It looks like there's some sympathy plays. And in regards to
sympathy plays, I like that one.
Yeah.
Sympathy plays. Yeah. All right.
In regards to startups, it's since February and March, when there was that big pullback, and there's been some concerns about inflation. I'm sure there's going to be people that are looking to take advantage of this because of this particular situation. So there's nothing that's really hit my radar like that's brand new. There's EML, there's SZL, IOU. Like IOU is really small. So, and then there's Zip is the second biggest one as well. But a lot of these companies, they're still, they're very high growth potential. And
I think what took everyone by surprise was the absolute out of the blue. It happened out of the blue. Nothing was on the radar, wasn't even speaking about it, and just happened. So there might be something happening. Let's shift gears a bit. Last time you were on, we spoke a bit about iron ore. Not really touch on it, but there's been some big moves lately.
Yeah, there has. So we've seen it sort of back down well below 200 a ton US. And it's sort of stabilized a little bit. We saw over the weekend, last week it was down about 10%. And then yesterday it was down a little bit. And now it's sort of stabilized. And it's been down here before around 180, and it has bounced a little bit. I'm actually long overnight an iron ore stock. So we'll see, it bottomed out a little. So we'll see if this is just a little bit of, a bounce opportunity or if we're going to see it dip a little bit lower.
Why is iron ore so important for the Australian industry, economy?
So in the state I'm in, Western Australia, it's a very big state, but there's not a lot of population. And in more the central region of the state and more north, there's a lot of iron ore, and it's high quality. Now, I don't know a lot about iron ore. I probably, should know a little more, but really it's just China loves it. And for now, it looks like...
That's the best one. I wrote a piece this week, and I basically said, the dragon likes what the dragon likes, and the dragon seems to like iron ore.
Yeah. And, it's very expensive, and this is not going to last for people are saying, super cycle and everything, but that usually means it's getting toppy when everyone's like, oh, it's a super cycle. And it looks like there's cracks showing in China with, debt situations and the like. So it's going to have to come back down. And so this is an interesting point now in the market on whether it's going to really start moving to 160 or so. And then if there's no bounce, it's, because all of these iron ore mines are very extended. It's been quite the run for them. From 2020 to now, it's just been prolific.
Scott, before I let you go, a bit of a loaded question. What is the relationship between China and Australia like at the moment?
I would say, so when we last talked, I mentioned, I also said the Aussie dollar to 80 odd cents, and, we haven't really, it tested that, but then it quickly sort of, retreated. I would say it's about the same, honestly. And there was chatter about the Beijing are hosting the 2022 Winter Olympics. So there was chatter from a few, members of government about boycotting that. Yeah. So if that does, I don't think it's going to happen. But I mean, that would be really cool.
If that does, then that would be a catastrophic event, right?
Yeah. So for now, it's stable because the last thing they could have done was done something to the iron ore export that we send to them, but they haven't done that. So for now, it's in simple terms, I see that it's stable, but not good, but just not worse.
And we're in consolidation basically. Looking for a breakout, if I could put it like that.
Yep. Yeah, the boycott is the breakout indicator there. Yep.
Scott, thank you so much for joining me today. If the listeners want to catch up with you, see what you're doing, where can they find you?
So, look, you just feel free to contact me on LinkedIn or go to www.forexbriefcase.com or Scott Andrews at forexbriefcase.com as well. I got a bunch of followers as well from when you actually did this. So
let's
just feel free to contact me. I'll get back to you.
To our listeners, we'll put those links in the comments. Peace, love, and prosperity, and we'll catch you in the next one. Cheers.